4 signs you should consolidate your debt. Are you feeling overwhelmed by the weight of multiple debts, wondering if there's a way to simplify your financial life? Consolidating your debt can be like clearing the clutter from your financial desk, streamlining payments, reducing stress, and putting you on a faster track to debt freedom. Whether you're a young professional juggling credit card balances, a family managing loans, or someone seeking financial clarity, debt consolidation can be a powerful tool to regain control. Some people successfully consolidate their debts, saving money and simplifying their lives, while others struggle with scattered payments, high interest, and mounting stress. The difference often lies in recognizing the right moment to consolidate. In this article, we'll explore 4 signs, grounded in financial research from sources like Forbes, The Wall Street Journal, and the Consumer Financial Protection Bureau, CFPB, that indicate you should consider consolidating your debt. These aren't just hints. They're based on patterns observed in successful debt management strategies. By the end, you'll know exactly what to look for in your financial situation, and more importantly, how to take action to simplify and strengthen your financial future. Stay with me until the end, because you might be closer to a stress-free financial life than you think. Let's dive in and see if debt consolidation is your next step. Sign 1. You're juggling multiple high-interest loans. The first sign you should consolidate your debt is juggling multiple high-interest loans, such as credit cards, personal loans, or payday loans, with annual percentage rates, APRs, often exceeding 15 to 20%. A 2021 Forbes article highlights that high-interest debt compounds quickly, eating into your income and making it hard to track multiple due dates and balances. Consolidation combines these into one loan, ideally with a lower rate, simplifying payments and saving money. Picture 2 co-workers, Emma and Noah, both 30 years old, each with $20,000 in debt. Emma has 3 credit cards at 22% APR, struggling to pay minimums across different due dates. Noah consolidates his similar debts into one loan at 10% APR, making one manageable payment. Emma's scattered, costly loans signal a need for consolidation, while Noah's streamlined approach shows he's on the right path. Juggling high-interest loans doesn't just strain your budget. It risks missed payments and credit damage. If you're managing multiple high-rate debts, you should consolidate. To start, list your loans, their balances, and APRs, and research consolidation options like personal loans or balance transfer cards with lower rates. Reflect on your debts. Are you handling several high-interest loans, or a single manageable one? Simplifying high-rate debts is a clear sign consolidation could transform your finances. Sign 2. You qualify for a lower-rate consolidation loan. The second sign you should consolidate your debt is qualifying for a consolidation loan with a lower interest rate than your current debts, reducing your overall cost and speeding up repayment. A 2020 The Wall Street Journal report notes that borrowers with good credit, scores above 670, or stable income can often secure consolidation loans with APRs of 5 to 12%, compared to credit card rates averaging 16 to 24%. A lower rate saves thousands over time. Imagine 2 friends, Liam and Ava, both 35 years old, each with $15,000 in credit card debt at 20% APR. Liam, with a 700 credit score, qualifies for a consolidation loan at 8%, cutting his interest costs in half. Ava, with a 600 score, can't secure a better rate, so consolidation wouldn't help yet. Liam's eligibility for a lower-rate loan signals he should consolidate, while Ava's situation suggests she needs to boost her credit first. Not qualifying for a better rate doesn't mean you're stuck. It's a sign to improve your eligibility. If you can get a lower-rate loan, you should consolidate. Check your credit score and shop for consolidation loans from banks, credit unions, or online lenders to compare rates. Ask yourself, can you qualify for a loan with a lower rate than your current debts, or are you locked into high rates? Access to a better rate is a strong sign consolidation makes sense. If you're feeling inspired, comment number 15 below to share which sign resonates, and consider subscribing with notifications for more financial insights. Let's keep going. Sign 3. You can commit to a fixed repayment plan. The third sign you should consolidate your debt is being able to commit to a fixed repayment plan, where you make consistent monthly payments over a set term, like 3 to 5 years, to clear your debt. A 2022 CFPB study found that consolidation loans with fixed schedules help borrowers stay disciplined, avoiding the trap of minimum payments that prolong debt. Commitment is key to making consolidation work. Picture 2 neighbors, Sophia and Ethan, both 28 years old, considering consolidation for $10,000 in debt. Sophia budgets carefully, ready to pay $300 monthly for 4 years to become debt-free. Ethan's spending is erratic, and he's unsure he can stick to a fixed plan without dipping into credit. Sophia's discipline signals she's ready for consolidation, while Ethan's uncertainty shows he's not. Inability to commit doesn't mean you're irresponsible. It's a sign to build better financial habits first. If you're ready to stick to a repayment schedule, you should consolidate. Create a budget to ensure you can afford a fixed payment, and test your commitment by saving $100 a month for 3 months. Reflect on your discipline. Can you commit to a fixed repayment plan, or is your budget too unpredictable? Dedication to a plan is a sign consolidation will work for you. Sign 4. You're ready to stop using credit temporarily. The fourth sign you should consolidate your debt is being ready to stop using credit temporarily while you pay off your consolidated loan, preventing new debt from piling up. A 2021 Forbes article emphasizes that successful consolidation requires a mindset shift, pausing credit use to focus on repayment, ensuring you don't undo your progress. This commitment protects your financial future. Imagine 2 colleagues, Lucas and Zoe, both 42 years old, consolidating $25,000 in debt. Lucas cuts up his credit cards, relying on cash and debit to avoid new charges while repaying his loan. Zoe keeps using her cards, adding $5,000 in new debt, negating her consolidation benefits. Lucas's restraint signals he's ready for consolidation, while Zoe's continued credit use shows she's not. Not pausing credit doesn't mean you're reckless. It's a sign to rethink your reliance on borrowing. If you're prepared to halt credit use, you should consolidate. Practice by freezing one credit card or setting a strict cash-only budget for a month. Check in with yourself. Are you ready to stop using credit temporarily, or still leaning on it? A credit pause is the ultimate sign consolidation will lead to debt freedom. If you're motivated, comment number 15 below to let me know which sign sparks your drive, and subscribe with notifications for more tips to thrive. Final thoughts. Now that you know these 4 signs, take a moment to assess your financial situation. Are you juggling high-interest loans, qualifying for a lower-rate consolidation loan, able to commit to a fixed repayment plan, and ready to stop using credit temporarily? These aren't just indicators. They're proof you're poised to simplify your debts and accelerate your path to financial freedom. The great news is that debt consolidation is a strategy you can embrace with preparation and focus. Start today, list your loan rates, check your credit for consolidation options, or budget for a fixed payment. Your debts don't define you. They're a challenge you can conquer with the right tools. Don't wait to take control. Build a plan that makes your financial life clearer and stronger. If you found this empowering, comment number 15 below to share which sign inspired you most, and let me know how you're moving toward debt freedom. Subscribe and turn on notifications for more tips to manage your finances with confidence. Here's to a debt-free, unstoppable you.